expiry day. It's Vipul Prasad, founder and CEO at Magadh Capital, who's now joining in on the show. Great to have you on board. To understand, let's start talking about the banking space. Which are your favorites within the basket?
Yeah, hi, good afternoon. So in banking, we like obviously HDFC Bank at the top of the list, but also increasingly SBI and Axis Bank are the two names that we like quite a lot. And the story is quite simple in the sense that as the process of NPA resolution under the NCLT process gains pace, we'll see quite a significant improvement in the loan books of these two banks. And apart from that, earnings will also get a lift, because it won't just be a decrease in provisioning, but it will also lead to some amount of write-backs occasionally. So, and on the top of that, the kind of valuations that these two names are trading at, that indicate quite a bit of upside from here. And one more thing is worth highlighting, that both the companies had been going slow on corporate loan books. So because of obvious reasons, the loan books had been in a very bad shape. So they were not chasing too much of credit growth. But so that is going to add a lot of visibility to their earnings in the times to come. And on the retail side also, both the banks have been quite active, and I think with this kind of confidence that they are gaining on the capital structure should give a boost to that also. So yeah, we are quite positive in these two names on an incremental basis, and HDFC Bank has been a stock that we have been positive for quite a while. So because in that case, the story is quite simple, that 18 to 20% loan book growth, although and I am consistently around 4% or higher, and at the same time valuation is on the higher side, but they are able to justify that. So at least at the pace at which their earnings are growing, the stock will be able to grow.
Vipul, tomorrow again we're going to start off a brand new month, and all the focus will be around Motown, because you're going to be getting the monthly sales data for February. Do you think it's going to be any different than the trend that we've seen in the last 3 months, that of a decline and across segments?
I don't really think so. I think even if, let's say, for 1 month we may see better data, although I don't expect that for this month, but let's say in between we say decent quality of data. But I think this is a cyclical dip after a 3-4 year period of good growth for these companies. I think we are into a period of another 2-3 quarters before the volumes revive. But having said that, I do think there are clear growth path, and we see very clear reasons why in 2-3 quarters from now it should revive. So actually I'll be quite positive on auto sector. I mean, not the entire sector, but some of the leaders in this space, and more so if I can have patience around the sector.
All right, patience within the sector, that's what you need, but just keep an eye out on some of those auto stocks. They are coming under a bit of pressure. The auto index as well is down and out. 10,800 given up, 10,788. The broader market as well has cooled off. Vipul, wanted to get in a take as to where exactly you're finding value within the FMCG basket, because a lot of experts are talking about how barring the valuations which aren't compelling, the overall volume growth, the fundamentals do seem to be intact. Financials as well seem to be steady. It was one of the steady performers in terms of a sectoral index last year. What do you like within the FMCG basket?
Yeah, as you rightly pointed out, as a sector also this entire basket has done quite well, and largely driven by earnings, and also due to some re-rating also that has happened. And obviously this means that valuations do not look quite compelling per se, but at the same time there are names like Britannia, or for that matter Dabur, so wherein you are getting very clear opportunities. For example, for Britannia, the Hindi belt is where they are weak, and all of a sudden if you go to some of those states in the smaller towns, you are seeing that there is a renewed thrust from Britannia to be more visible on the shelves in the smaller towns. And their market shares have been very low. At the same time, Britannia also has been doing quite well in terms of premiumization of its product. So they are doing all things that are required, not just to push up their top line at a decent pace, but also to enhance their margins incrementally. So which means that I would not be surprised if they are able to deliver over the next 3-4 years, definitely in late teens in terms of earnings growth. So that means that the stock can continue to grow well. So even if let's say you assume that there's going to be some derating because the valuation multiples have come up to very high levels. So let's assume for a moment that there's minor derating. Then also at least 15%, 17% per annum the stock can continue to deliver. Similarly, even in case of Dabur. Of course, in the last 1.5-2 years, this happened that they have managed to fight back the challenge from some Ayurveda-based challengers. So they've done quite well on that front, and also in other segments also. So even here, in case of Dabur, the top line growth can comfortably be 13 to 15%, largely driven by volumes again. So in case of Dabur also, we like it quite a lot. So these are the two stocks that we prefer in this space.
Yeah. But given the uncertainty with regards to how this entire situation between India and Pakistan, Vipul, is going to escalate, if at all it were to escalate from here, do you sense that that defensive tilt of the market may come back, not pharmaceuticals, but maybe ITs, where people are going to find safe haven in?
IT honestly has continued to surprise me positively, and really it has played its role as a defensive, and a classic case where one can hide in terms of damage to the broader markets. So, but having said that, I would still think two things worth highlighting here. One, Indo-Pak standoff. I still think the base case should not be deep escalation. So. And I would still think that there is a very high possibility that over the next 10-15 days, probably nothing will happen incrementally, and then we de-escalate. And maybe another situation, let's say for a moment that there is another situation which has some decent probability, although less probability than the first possibility that we talked about. And in this case, there is a low intensity conflict, but a very short-lived one. So in this case also, if the market comes down, it will be a V-shaped kind of a recovery. Only the third situation, wherein there is a proper escalation and there is a full-blown war, there is a problem, deep problem for the market. So in that case, yes, defensives will get more precedence over everything else. But I would still think that the base case should be either the first scenario that I talked about or the second scenario. And talking specifically about IT names, yes, they have done very well. And I would not be surprised if in the near term, let's say in the next, say, at least 3-4 months, they continue to do well. But let's not forget one thing, that there are some signs of slowdown in the Western economies, which means at some point in time the business of these companies may also slow down. In any case, they had not been delivering 25% kind of earnings growth, so it was more like teen earning growth.
Right.
And in all along, as they have outperformed the market, their valuation multiples have got quite elevated.
Right. Stay with us, Vipul. Lots more to chat about, but in the meantime, let's hear it then from Shankar Sharma, who believes that he is long-term on organic chemicals, and he's bullish on that sector rather, and he's looking to invest in an upcoming small-cap company within the space.
Entire chemical space is very good even now. I mean, you can look at companies like, for example, Vanity Organics. I mean, just terrific, or Aarti, and these companies have been stellar performers over literally decades. So and there are many around that, smaller companies. There is a very tiny company which I can't name, which just in the last 12 months went up I think 20 times. I mean, there's so many names like that. So if you pick them right, it's a sector which obviously has been very volatile over the last 10-15 years because of chemical prices moving all over the place. But I think there has been some kind of solidity coming in. But you have to work very hard, figure them out. I'm figuring out one new company right now as we speak. Looks very interesting. So it's a good overall space, and that apart, there are all kinds of other small cap companies. We don't fall into any category. I'm looking at a number of them.
Right, not divulging too many details, but some of these organic chemical companies, the likes of RT, etc., look very attractive according to Shankar Sharma. So let's glance at the markets, and the small cap index as we speak, well, now it's up 0.8%. Schneider Electric 8% there. Sadbhav Engineering, remember we spoke with the management earlier this morning, is having a terrific run, crossed the 190 mark. You also have DCM Shriram, Phoenix Mills, Gujarat Pipavav, Delta, by the way, up 6%. Ditto is the case with Symphony, which is gaining quite a bit of traction. In fact, let's listen in to what the management of Sadbhav Engineering had to say earlier today on ET Now. That stock up 8.5%. Nitin Patel of the company believes that the upcoming new projects will bode well, and he also says the new IPC agreements might require a bit of a cautious approach. Let's listen in.
Absolutely, in normal case, when the contracts has been started and the site has been established well, actually we don't see any other challenges, even though the election period is coming ahead. 4 hybrid annuity projects which are going to be operational basically from the Q1 of the FY20. So this will basically give the further uptake in terms of the execution for the coming quarters. Actually, the two things, basically the projects which we have started recently, these all are the EPC projects, so there is no additional basically significant working capital will be required, number one. And there is no dependency on the lending institution basically to get the payment, like in the hybrid annuity case. We are yet to get almost around 600 crore plus of the fresh mobilization advances out of the balance projects which we are going to start. The recent bidding, what we have seen the trends, almost 25 bids has been accepted by NHAI, and out of this we have seen in hybrid annuity hardly 3 or 4 players have submitted the bids. And in the EPC, but we are seeing that the obviously between 4 to 6 players, 7 players are there. But largely we have seen the new entrant, the basically who were basically coming to NHAI for bidding for the first time, or the basically they are the new entrant. They were little bit aggressive. So we are of the view that the way the new terms and conditions of the EPC agreement which is there, that requires basically more cautious approach so far as bidding is concerned.
Okay, that's the word coming in from Sadbhav Engineering. In fact, the stock shot up a good 9% at the high point of the day. Call it the ET Now impact. But Vipul, earlier on, Shankar Sharma was talking about as to how he still has conviction in the chemical space, as niche and specialized as it may be. But do you like anything from this cluster?
To be honest, no, because I still am unable to get a hang on chemical price trends. So although yes, we are getting quite a bit of positive news flow from China. For some time we have been getting it regarding closures of supplies, but still I'm not very convinced about the quality of analysis that I can do based here. So on chemicals, that's the reason why I have not been really looking at it. And one more reason, I tried to avoid so-called hot sectors. So somehow 2 years ago it was doing so well that I thought, let me keep away from it. So yeah, in fact, if I have to play commodities, I'll rather look at some of the larger steel names or aluminum names. But at the same time, I must admit that some of these stocks can do quite well just because of the fact that they're being well run, and there is some tailwind at some point in time that can kick in for them.
Okay, just looking at some of the data with respect to the series gone by, while banks have been a bit of a no-show, down nearly 2%. Ditto is the case with some of the other rate sensitives like metal. It's been media that's been your shining star, and that index has gained in double digits for the series gone by. In fact, Kunal was just curious as to what you're doing with names like Z. Incidentally, that stock, after last month's badgering where the stock hit a level of about 288, it's recovered very smartly. What's the sense that you're getting on Z or any of the other plays within the media packet?
So I believe Z, I think has run up quite well, but if you look at other media stocks, then I believe Sun TV is the one which I think looks quite ripe for a move on the upside. So Z might probably go into a range, but there would be other stocks which might pick up into some bit of pace. Sun TV, which was trading just on the 600, 605 odd mark, on spot levels. You look at the last 1 week or 2 week of price recovery, price trends. We've seen good recovery from those 540, 550 lows. The stock is rising on high volumes. It's trying to break. It's rather broken in the 50-day moving average, but it's also trying to come back into the thick of the price uptrend. So I believe with some bit of mean reversion happening into a lot of stocks, large caps and mid caps, even Sun TV could rise higher from current levels. I think 630 to 650 could be a near-term target range for a short-term trader.
Okay, thumbs up there on Sun TV within the media pocket. What about you, Vipul? What are you expecting from the Z deal? Buzz on the street is that, the strategic stake sale could culminate soon. There are just two players now in the fray, and we could see quite a bit of upside on the stock. What's your call?
See, in these situations, it becomes more of a binary call. So that's why I've been staying away from this. But yeah, I do agree that if they are able to get a good buyer with a good name and with good deep pockets, then yeah, it'll be a very good thing for the company and at the same time for the shareholders also. But for me, some concern for some time has been that this is a very disruption-prone industry. And on that, if you are commanding the kind of valuations that Z had been commanding, let's say about a year ago, so it is not a very good recipe for an investor. And one more thing, after Z announced that they are going to sell out, they were looking to sell out their stake, then also I was a bit disappointed in the sense, in fact I was surprised in the sense that Z was one company that had done phenomenally, one of the poster boys, so as to say, in the media sector, and they had held on to their own despite big challenges coming in. So when they decided to throw in the towel, it did come as a surprise. Then obviously it came out later that there were other reasons also. So but yeah, coming back to your question directly, yeah, it'll be more like a binary outcome. So for me it's a no. I'll not be interested in this stock.
Okay, but then someone is certainly interested, Vipul, and stock has done really well in last 1 month and it's up by 25% from those lower levels. Nevertheless, Vipul, thank you so much for joining us and sharing your insight on markets.